Everybody, ladies and gentlemen, hello and welcome to Nadex. My name is Philip and I will be your presenter for today's webinar. If you have a look at your webinar interface, you can see that small questions box. And please, if at any point in time something is not clear, you want me to focus on something else, want me to explain concepts a little bit more, more deeply, just let me know and I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why to just let me know that both the audio and the screencast are working properly. And I'm just quickly changing some slides here so that you guys can actually see that the images are changing. We're looking good. So thanks everybody for the feedback. Today's session, as usual, is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're really comfortable with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose, especially true for the main part, the live part of today's webinar. We will be looking at the markets together. I will be telling you what I'm seeing on those markets, which does never imply that I'm suggesting that you take a long or a short position or any other kind of position in one of those markets just because I say I like this market for one reason or the other. It's really just always educational purpose. So please make sure you're okay with this before continuing with the webinar. And that being said, here's the risk warning from Nadex this time. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. And with the formal things having put out of the way, let's have a look at today's agenda. Just as always, at this point in time during the week, we want to look at the markets. We want to see if there are any setups with our trading strategies, and we want to have a trading strategy in place. Why do we want a trading strategy and not just act on the news or a gut feeling? We want our trades to be comparable. We want to have the inbuilt edge of our strategies manifest itself, being able to play itself out over a large sample set of trades. And I can only achieve that if my trades are comparable. If my bet sizing is consistent, if I'm risking the same amount of money on any one given trade, and if my setups are always the same kind of setups. And so I suggest we just jump in and have a look at the markets. And my idea for today is that we have a look at the bigger picture about what several markets are doing. And we're looking here now at an example of a silver chart, and we're looking here at a monthly silver chart. And I think this chart should be up by now. The idea is here always, I want to see what the market is doing on multiple time frames. The idea is if a market is showing me the same picture, the same idea on multiple time frames, the probability that this setup might play out itself is rather more likely than just one time frame is giving me a bullish signals, the others are more or less neutral, some are bearish. If all time frames that I'm analyzing are bullish, then this should make up for a potential nice trading opportunity. If I say a potentially nice trading opportunity, the important thing to accept when it comes to trading is we will never know if the next trade that we will put on will be a potentially profitable trade or if it will be a losing trade. We can never know. We don't have a crystal ball. There is no crystal ball for trading. The only thing that we can do when it comes to trading is to be consistent with our approach. And if we apply the correct strategies, we should be able to have potentially profitable trades more often on our hands than losing trades. And if those potentially profitable trades are larger than losing trades, we have actually two things working for us. We should be having more potential profits on our hands than losses, and those profits could be or should be larger than the losses that we always have to incur. And for that reason, it's important to be consistent with our position sizing. It doesn't make sense to risk $1,000 in one trade and just $100 on the next one. I don't know if that next trade is working out or not. I don't know if the next trade will be a losing trade. And for that reason, they must be comparable. My analysis can be perfect and spot on. It could still go wrong. By going wrong, I mean it's a losing trade. We must distinguish for our trading between good trades and bad trades on one side, and on the other hand, potentially profitable trades and losing trades. The only thing that we can control when it comes to trading is we can only place good trades. And a good trade is such a trade that is completely in line and in adherence to our strategies, to our rules. And this is the one thing that we can control. We can decide if the setup, if the chart meets our requirements, and if we like that chart or not. And if that's the case, we put on that trade. And if we do so consistently with a proven strategy, we should, at the end of the year, we should be able to come out ahead. If we are always gambling different position sizes, things are probably not going that well. So we must aim really for that consistency. I think that's the most crucial point when it comes to trading, and especially what separates the long-term professional winning traders from those who just gamble with the markets and probably lose their account pretty fast. So let's have a look at this chart here. We're looking at a chart of silver, and silver is priced in US dollars per troy ounce. And we're looking here at a monthly chart, and we can see that since this move down, since 2012, 2013, the market has started to go sideways. We can see that this sideways move also occurred by looking here at our moving averages. We're looking at the 10, 20, and 50 period moving average and at the 200 period. And what I want to see usually is this fanning pattern. I want to see that those moving averages are well separated from each other, because this is what gives me a good, strong trade. The next thing that is important to me is I want to see what is the market actually doing. Does it give me lower lows and lower highs? Then we would have a downtrend. Or does it give me higher highs and higher lows? This would be an uptrend. Or pretty much what we're seeing here right now, this market is more or less here moving sideways. Technically speaking, this is a high, this is a lower high, and this here is another somewhat same high, lower high. It retraced pretty deep here, and for that reason, it's not that clear of a downtrend, even though this here was clearly a new, and let me try to make it larger here for you guys to see better. This was clearly a lower low here, and this high here also was a lower high, but only ever so slightly. And all in all, it's not that clear of a downtrend as we would expect just by looking at those moves here to actually see that. I don't compare this high with that high, or this high with this high. The most recent high is this one, and I compare it to that one, and we can see this is a deep retracement. It's far more, it's almost a 100% retracement. So this shows me that the market isn't really poised here to show much more attempt to go lower, and we're trading here. Those moving averages also have pretty much closed down. 10 and 20 period moving average are pretty much sitting on top of each other. Once again, this market is moving sideways. Let's have a look at the lower time frames. Let's have a look here at the weekly chart. And on the weekly chart, we pretty much get that same picture. And once we start to zoom out a little bit, you can start to see that I have put some levels in here. A level, we always try to use here at trade position flat horizontal levels. We have a hard time using sloping trend lines, because the idea is with the sloping trend line, it's not so clear for everybody how to draw those sloping trend lines. And once, even if you have them on your chart, it might be a little bit difficult to act upon them. So if price pulls back, that horizontal level here is on that chart, on all our charts, at the same level all the time. I just know it's sitting here at 16.42.40. The sloping trend line, as it's sloping, has every candle a different value. So if we want to trade off those, it's difficult to adjust our orders and be really on top of our game here, plus the additional subjectivity of those sloping trend lines. So we always want to see flat horizontal levels. And what does define such a level? It's a touch, a second touch, and now we have our level. And you can see we even have here a third touch. We have several touches already here of those candles of this level, and this is how I put those levels in. The idea is that I want to use those levels in my potential trade setups, and I don't want to see that prices actually, that such a level is in the way when price is trying to move in one direction. The picture I'm always using for that is I don't want to just speed on the highway, just enter the highway, give full speed, accelerate at my best, and then just find a brick wall standing in the middle of the road. And this is pretty much what those levels would be doing here if I intended to trade from the weekly chart. Looking at the weekly chart, we have a low, we have a high, which is a higher high, we have a higher low. So technically, this weekly chart already has started to turn into an uptrend. Is it a strong uptrend? No, it isn't, because once again, those moving averages are pretty much all over the place. Nothing really going on here. Let's have a look at the daily chart. And on the daily chart, we now start to see some kind of smooth flowing price structures. And I was pretty sure that this was a nice uptrend with some potential trading opportunities there, especially in the lower time frames. What I really liked was this small candle here, as it was just sitting very close to a moving average buy zone and just sitting on top of this level here. The idea would have been here, if price continues higher, this could potentially give me a 3-to-1 profit target on a way to a retest of this old high. However, didn't really happen. Price retraced, it retraced way beyond our moving average buy zone. And sure enough, we started to make a new lower low, lower high, and price is pulling back once again. Now, this pullback that we started to see here, you see those moving averages have closed down once again. This push higher here on the daily chart. Let's have a look at how this looks on an 8-hour chart. And then on the 8-hour chart, we already start to see that this was a much clearer, more pronounced uptrend, and with potential pullbacks that might have resulted in buying opportunities. The most crucial point that I want to show you guys here is if we drop down now to a 1-hour chart, this is the section that I find most interesting here. We have seen on the 8-hour chart that this was a clear, nice uptrend. However, those pullbacks that we got here, those have been very deep pullbacks. That's not really tradable according to our strategies. One more word about our strategies. Those are just our strategies. This does not imply that they are the only strategies or that they are the best strategies. Those are the strategies that we work every single day in our own accounts in the markets. So much for putting your money where your mouth is. There are different strategies, there are other strategies, and I do not want to suggest that ours are better or worse than anybody else's. You have to find a style of trading that works for you. We are trend following traders, which means we try to identify that the market is going higher. We're waiting for those pullbacks for our main trade setup. And then we want to participate when the market probably starts to resume its push higher. What we're looking for here is a pullback in our moving average buy zone, 10-20 periods. But you see on the 1-hour charts, those pullbacks always have been pretty deep. They have taken us to the 50-period moving average. And this is not what we're looking for. Now, one rule of thumb, if those pullbacks are way too deep, let's start to get higher with our time frames. So we move from a 1-hour chart to a 2-hour chart. And please note that on this 2-hour chart, while those moving averages are being drawn, we start to see we still have those pullbacks. It's still not a perfect chart structure that we're looking for here, but we have definitely now moved away from the 50-period moving average. Those pullbacks are still a little bit too deep here for me. So why not go just here to a 4-hour chart? And this is now the structure that I'm usually looking for. Price is an uptrend. I see my fanning moving averages, 10, 20, 50. We see the pullbacks, and sure enough, price continues to push higher. Was there a tradable setup here according to our rules? No, there wasn't. But the main point for me here really to illustrate is start to work and to play with those time frames. No trade setup there on the weekly chart. The 8-hour chart, somewhat murky. The daily chart, the same. 1-hour chart goes in the same and goes in the right direction, but just doesn't give me the setup there. And now we've started to push here from over a 2 to a 4-hour chart. And now I have this this structure, this optimal chart structure that I'm looking for my potential trading opportunities. Now price has started to push lower once again. We're looking at a 4-hour chart. Let's have a look again at the 1-hour chart. And sure enough, this is already a well-pronounced and well-established downtrend here on the 1-hour chart. The 2-hour chart, I'm pretty sure, will give us the same picture. And what I would be waiting for here for a potential trading opportunity might be a pullback here to a moving average sell zone for a potential short entry. Now, the pullback doesn't seem to happen here. Let's have a look at the 1-hour chart. We are getting closer into our sell zone, but again, it's not really the setup that I'm looking for. Remember, just now, when we have moved too deep in the zone, we have increased the spacing of our time frame. So we moved from a 1-hour chart to a 2 to a 4-hour chart. If the pullbacks aren't deep enough, well, we do just go into the opposite way. We would be moving now from a 1-hour chart to a 30-minute chart. And you see the pullbacks are getting now way deeper here into our moving average sell zone. And sure enough, just sitting below this level here, there would have been some shorting opportunities. Why is this now a shorting opportunity, or would have been a potential shorting opportunity? We have the fanning pattern in those moving averages. We have a very clear and well-pronounced downtrend. If I was to put in now a fib retracement, I don't know, I haven't tested it before, but I'm pretty sure this might be sitting here around the 38% retracement. And sure enough, that level is very close to the 38.2% retracement. And what's really crucial here, let's get rid of those fib retracements here. If I was to trade off this pullback here, my stop loss when trading conventional instruments would go just above the top, just above the high of that candle. And that potential stop loss location would now be protected by this level that I'm seeing here, the 1724 level. And this is why, is it impossible for that stop to be hit? No, nothing is ever impossible when it comes to trading. However, that stop, that level sitting there makes it just a little bit less likely that this stop loss might be taken out. And this is why I'm looking for several things to come together. I want to see the trend. I want to see the fanning moving averages. I want to see a bearish candle in the sell zone. I want to see all this happen very close here to a level. And once all those things start to come together, then there might be a potential trading opportunity. Now, if we think that price is sitting here now and we might start to pull back here into a moving average sell zone even further, we could be looking now at, let's just get the window over here. We could just be looking here at the Nadex platform, and we're looking here at commodity binaries, and we're looking at silver, and we could be looking here at the daily, and we see the daily still has about 1 hour and 6 minutes left. We're speculating the price might be pulling back here. And what we might be looking for trading could be, for example, might be 1705. 1705 would be sitting just here. We might be inclined to trade that contract here. Now, I will explain in just a minute why I think that this contract might make sense. Again, it's never a recommendation. I'm just trading this contract now for the fun of it and to show you how easy it is to enter a trade. And I always want to see what the chart is doing, and I take the chart as a starting point to formulate my trading idea. I'm always starting with the chart. That's just me. There are other approaches to trading, but starting with the chart is I want to have a plan. I want to have an idea why I want to take that trade now. So how many contracts am I trading? And let's just do those numbers up. My maximum loss when trading 7 contracts is $192.50. Why the 7 contracts? Well, I have a demo account here with about $21,900. The idea which I use for my own trading is I want to risk about 1% of my account on any one given trade. and 1% would be $219. So 192.50 is just below that threshold. And yeah, that's the amount of contracts I'm intending to trade here. I'm just placing the order now. Sorry, this order has been rejected. Sorry, guys, something went wrong here. Well, let me just explain why this contract, why I picked that contract. Well, 1705 is sitting here just in the middle of this range. And the idea is, if I'm able to buy this contract now for 27.25 and it pulls back to this level, if an option is trading at the money, the delta of that option should be very close to 50%. And the idea here is that the price of a binary is pretty much acting as its delta. The price of this binary is always fluctuating between 0 and 100. Binary, it only becomes at expiry, because then either settles for 0 if it's trading below the strike price, or at 100 if it's trading above the strike price. Now, the idea here is I could be opening this contract for 27.25, and if it pushes up here to this level, and I have a take profit order in place at about $45, this is something that might be happening. Again, it's not a recommendation, but that's the logic why I picked this level and why I would start to scale out at a price of about 45. And essentially at this level, I would have gotten a 1-to-1 profit target. And this is pretty much the most minimum thing that I'm looking for. The nice thing about those Nadex contracts is you can start to scale out of those positions, which means you don't have to close all 7 of those contracts that I intended to trade. You could just put in an order now for 4 contracts and let the remaining 3 contracts run. The idea there would be, of course, I'm taking already 1-to-1 profit on those 4 contracts, which in the end should result that on the remaining 3 contracts, if that profit target is hit, I shouldn't be able to lose any more on that position. I should have a pretty much risk-free trade on at that point in time. Now, that would have been a potential counter trend trade. If you think, no, the big picture is this market is going down, you might be inclined maybe to look at the weekly chart and then try to identify potential targets for a short trade. Let's go out there here once again and look for potential targets. I don't suggest that this move down now will take us here to this 1642 level within the life cycle of this option, but you could pick something here along the way if you're more trading on a longer term view to the downside. I hope all that makes sense. If there are questions, please let me know. And while you might be entering those questions, I would like to have a short look also here on those other markets, especially the S&P 500, the E-minis. Joe is asking if my buy zone and the definition of the sell zone is the same thing. Absolutely the same thing. I'm always looking at the 10 and 20 period moving average. This time it's an uptrend, so it's the buy zone. On the chart that we just saw on our screen, it was a downtrend, and so the 10 and 20 period moving average form my sell zone. It's always the same definition, and I'm never changing the settings of my indicators 10, 20, 50, 200, and the default settings for MACD and RSI. It's the same for all markets. It's the same for all time frames. Any market, any time frames. That's one of our claims when it comes to our trading strategies. And so the definition of the buy and sell zone definitely is the same here. What can we see here on the daily chart for the S&P 500? Sure enough, all-time highs. Price is pushing higher. We are due for some correction here. We are due for a little bit more pullback. Are we terribly overextended? No, we aren't. However, the last pullback that we saw happened around here, around the end of September, and a small correction might be in place right now. The next thing I notice, you can see how steep that ascension, those rising prices have been at this point in time. And you can see that RSI made a new higher high here. And now with those next highs, we can see that we're already losing a little bit of momentum here. Apparent in RSI, small divergence starting to show up here. And pretty much the same thing happening here. So this sideways upward sideways move. It's still bullish, but it's losing momentum, which also suggests that price might start to pull back a little bit. Now, what could be a potential target for a pullback? I always like to use here my Fibonacci retracements for that. And I would be just putting in here those FIB retracements, so 38, 50%, something like that. And the nice thing that I always like to do is I'm shooting here for a potential cluster, which just means I'm using a previous swing point low, I'm shooting for the same swing point high, and I start to see that the 78% retracement here is clustering with the 38.2. Both are not that strong. If I would have gotten a cluster of the 38.2 with the 61.8, I would have preferred that. Much more credible in my eyes, but that's always a technique that I like to use in order to identify potential targets here for pullbacks. Now let's get just rid of those. And that's the S&P 500. Let's have a look at the Nasdaq. Nasdaq is giving us a somewhat similar picture, but please note here in September, very, very deep pullback. We are still also a little bit closer here to where to our moving average buy zone. And once we start to put in here those levels, you see that those levels are much closer to where price is trading right now if we compare it to the S&P 500. Is this a level here? No, it isn't. What does it take for a price to form a level? I want to see at least 2 touches at this price. And here at this level, is it really 2 touches? I feel it's stressing those criteria a little bit if we're going here for 2 touches. I personally would think that this area here is way more reliable, especially if we move this a little bit higher up. We got this touchdown here also as well. Price is pulling back. Here, this level is acting as a resistance. Here, it's acting as support, and price is going higher. So S&P 500 definitely way more bullish right now. Nasdaq a little bit more reluctant. Let's have a look also at the Dow Jones. And this is the kind of setup that we're looking for our trading. Let's make it larger. That's our trendflow PLT style of setup. Price is pushing higher. We are in an uptrend. Price is pulling back. It's forming a small, somewhat bullish candle here, very close to a moving average buy zone. And how could this be traded? We would be trading this here on a break of the high of this candle. My stop loss location usually would go below the low of the recent swing point. And my first profit target would be going here for a potential 1-to-1 profit target. Now, keep in mind, with binary options and spreads, you don't really have to worry about having a stop loss in place because your risk is limited. You know your risk upfront every time you enter the transaction. And so you cannot lose more than what you have paid for that contract. Very, very big advantage. Even if the market would now just fall apart and crash down. We have the anniversary of the October 87 crash coming up in just a few days. So if something like that happened and price is just dropping, with futures contracts, with stocks, with CFDs, you would definitely have slippage occurring. With those Nadex contracts, you lose what you have paid for to open that position, but you cannot lose more. Very, very powerful instrument. So please keep that in mind also on top of that. Yeah, that was just another explanation here of the potential setup. Dow Jones, I would say somewhat middle ground between the Nasdaq and the S&P 500. Now, if I think the market might be coming down, I would potentially seek short opportunities, probably more in the Nasdaq. If I think the market is still pushing higher, my first opportunities or my first candidates for looking for long opportunities on lower time frames probably would be the S&P 500. We have about 1 more minute left, and I just very quickly want to have a look at oil. Yeah, let's just have a look at oil, and you see oil pretty much has been doing nothing since almost forever. Oil is sitting in this trading range here, and once again we have a touch of this price level here, we have 2 touches of this level here, another touch there, So clearly 42 is the level. We always refer to big round numbers, and you would expect that 40 is a very important level, but no, I think 42 is way more important. And the same thing is true. You would think that 50 would be very, very crucial when it comes to trading WTI. But once again, the level here rather is 51.80, 52, something like that. The media will pay attention to 50, so I would put 50 on my chart as well. Let's do it like that. And you see we have some reactions here, but clearly this range in which that market has been for quite some time is rather defined by the 52 and 42. And we are we are now just trying to touch this level here once again. And let's have a look at the details about what's going on here. This is a high, this is a low. Now, what's my reference low? I would pick that one here. So this is a higher low. Those moving averages are still fanning and pushing higher, but currently it looks like we are establishing here another new lower high, which is somewhat bearish. And please note, when price made this high and price is making that high, MACD was trading at those levels and is trading now there, and RSI was here and RSI is now there, which is a perfect divergence currently setting up on those on this move, on this probable likely retest here of the old high. And yeah, it's just look, if we go here really for 52 level, you see how price has been reacting to this level. My take on crude oil is, as long as price isn't really pushing much higher and coming and defining a new clear higher high and coming down for a retest of this level and then pushing higher once again, I feel this market is still range bound. And if you are interested in trading range bound markets, it's not part of our core strategies. We might be looking here at something on the lower time frames and maybe looking now at a potential pullback, at least to this 50 level. We will have to wait to see if this old low becomes retested. But on those lower time frames, my positions probably would be more directed towards the short side. All right, guys, time's already up. So let me just quickly move away the interface here. Yeah, guys, that's pretty much it from me for today. Thank you very much once again for tuning in. I hope you enjoyed today's session. You learned something new, you heard something useful. Yeah, sign up for other webinars. Would be really delighted to see you guys there. And just as always, if there are any questions, please ask those questions. And we are also very interested in feedback after this webinar. There should be a short survey. So any feedback that you do have for us in order to help us tailor those sessions more to meet your needs and demands and give you the content that you're looking for, just let us know. We would be happy to give you what you're looking for. Once again, for me, it's been a pleasure. Thank you very much for attending. And now to all of you, have a great day. Happy trading. Catch you next time. Take care. Thanks again and bye-bye.